All right, all right, all right. Let's go live. Mm, let's go live on IG. Come on, IG. All right. What's up, everybody? It is Wednesday, September 4th. Oh, are we not even connected to the IG? Well, that's too bad. All right. Well, today we're going to be talking about how to get a business loan. Guys, I'm Dominique, founder of Domino Effects Group and host of the Domino Effect, where we provide tips, resources on how you can establish a credible foundation, how you can access the type of funding that you need to grow your business if you have an opportunity, whatever the case may be, right, guys? We are here on a mission to help you expand and answer any of these questions that you have surrounding how to get funding for your business. So make sure that you are reaching out, you are scheduling time with our team, with an advisor, with myself, and getting your free funding blueprint. All right, you guys. So let's get in here, because like I always say, I like to go into a meeting with purpose and leave with direction. So let's get into it, right? How do business loans actually work? How do you actually get a loan? And we're going to talk about what are the things that our underwriters are looking for, right? Because that's the goal of this community, is to help you leverage, right? Give you the information that's going to allow you to get ahead, right? Be twice as prepared. So what we talk about is what the lenders are looking for, okay? And when the lenders, we're talking about banks, non-bank lenders, financial technology, right? Anything in the alternative finance space, okay? But there's multiple options, guys. So every lender is going to be different, okay? But typically, when it comes to getting money, all right, especially if you are a startup, there's many, a lot of people think that, well, I'm a startup, I might not be able to get the capital that I need, right? And that has been the case for a lot of businesses, right? Not knowing where to go. But here's some things that you could do as a startup. Okay, if you are a startup, you could go for an SBA loan, right? Be prepared to put down 10%. If you're looking at buying a profitable business, right now we're in the middle of the great wealth transfer, right? If you guys have heard about that, if you're interested in buying a cash flowing business, right, then the SBA would be a good option for you. All you have to do is prove that you have, some sort of understanding of the industry that you're taking over. Maybe it's a restaurant. We have a client right now that's taking over a telecommunications company because they have other businesses within that network that surround that same industry. What kind of history do you have? If you want to buy a restaurant, you don't necessarily have to have owned a restaurant, but maybe you've been working in the restaurant industry for 20 years or something like that. What are the qualifications? And you're really going to be proving to the SBA why it makes sense for you to actually step in and buy this business. So that's one thing you could do as a startup. Another thing you could do as a startup is absolutely be establishing your business credit, because you can all start to get business financing aside from separating your liability, which is 100% what you want to be doing, right? What you can do is you get business financing even if you don't have cash flow, even if you don't have credit, and even if you don't have collateral. So there's a strategy to doing this. I know probably we've seen a lot of like posts online, you could get this, then that, and business credit and blah. Listen, do your research, okay, guys, because you don't want to be out there just randomly applying. And I could tell you that this strategy often gets done wrong when people do it on their own. So, what do the lenders typically want to see? Well, if you're doing revenue, okay, if you have revenue right now, you can lock into and you can leverage that for some type of loan. If you are under 10, if you are under 1 year in business, okay, banks typically they want to see 2 years time in business or more, right? But what about for the businesses that are less than that are under 1 year? Well, guys, they're going to be looking at cash flow. They're going to be looking at your credit history. possibly pulling a soft pull. Now, if you've got good credit, 680 and above, minimal inquiries, right? You could get something like unsecured no doc financing where you could access up to 150,000 or more in 0% interest financing. So that would be a really good option for you. Doesn't report to your personal credit, right? Now, if you are in this realm, okay, of under 1 year, then they're going to look at cash flow. We talked about that, right? So cash flow, typically they want to see about $10,000 a month, okay? Revenue, monthly sales, even some other lenders, they want to see 20 to 25, okay? So that is something. Now, if you are doing less than that, like I said, there's other options you could do. Maybe you're in gig financing, you need some sort of short-term loan. Be prepared that might be a higher interest rate though, okay, and a shorter term, and you might even be looking at a weekly payment. So it really just depends on where you're at, okay? But guys, if you are in that situation, don't worry, because you have us. You can leverage us. We've helped businesses get qualified for 100,000 and then even 1 million or over 1 million on a credit line, but that's because they had credit history. We were able to show revenue. We were able to show cash flow. So we were able to use some of these other factors to help them get the financing that they need. So what do lenders want to see? Okay, this is when you are asking for a loan, right? You're going out, you're looking for money. When typically, if you've done this already, right, you've had a conversation and they're going, what are you going to use the money for, right? If you say, I don't know, that's a big red flag, guys. And honestly, if you don't know, it might be a good idea to take a step back and, just go through your financials, figure out what it is you need right now that's going to help you generate more revenue. Lenders want to hear you say that you're doing things like, you're increasing your staffing, right? They want to see that you're looking to improve your company, right? They want to see cash flow. They want to see that you're thinking about profitability. You're thinking of the long term. So looking here, right, we're talking about staffing. Are you hiring new people, right? That's going to drive sales. Are you going to be purchasing inventory? That's going to allow you to sell more products, right? And more goods. If you're looking at getting equipment, now you can take on more jobs. So what about advertising? What about marketing, right? Getting a campaign, doing some Facebook ads, whatever that looks like, okay? What's your plan to drive more revenue and increase sales, okay? Any type of expansion that you want to do, guys. If you're thinking about going to another location, right? So whatever, or let's say, this is a good example. We had a client that was a caterer, right? Caterer that wanted to expand to a commercial kitchen. So in that type of scenario, what if you're buying trucks, right? Equipment, so you can stand out, so you can do more, right? That equipment allows you to take on more jobs, okay? So these are the things that really get lenders excited, right? That's about growth, okay? You can't just say that you're doing these things, okay? And making up stories as you go, okay? Make sure you're being very transparent, you're being very authentic, and you're being very real about the plan that you have with the funds. Because remember, guys, listen, you're going to be taking on this funding as well. So if you don't have a plan to put it to good use, then that's where you step into good debt versus bad debt, right? So just think about that. So the more that you prepare ahead of going in and asking for funding, the more your chances of success. Okay, so stay twice as prepared. That way it's easier for you to get approved, and it's easier for you to get exactly what you're looking for. So let's step into terms, right? This is very, I get this question a lot, right? Typically, if you want to work with a bank or with an SBA lender, if you do a working capital loan, you could get like a 10-year 7(a) product, 10-year term, very low rate. You could get it at prime, usually 2 or 3, plus 2 or 3%. Actually, just had a lady I was speaking to. She has an SBA loan at 3%. Okay, so whatever the prime rate is, typically, then you would just add 2 to 3% on that. That would be your actual rate. But there's a lot of requirements that go with this when you're going to be seeking this type of financing, okay? This could take 2 to 3 months if you're looking for an SBA loan, sometimes even longer. If you're going to a traditional bank, it could take months, right? And so we can typically get it done in 45 days or less if everything is in order, right? If nothing pops up along the way, which has happened actually. But if nothing pops up along the way, then we can get it done within 45 days once the package is put together and sent out. Also really help clients with the SBA 7A Express. So that would be an option for you as well. But if you don't go the SBA route, right, and you do go to, excuse me, non-bank lender, if you're going to go that route, then it could be anywhere from a 1 to 5 year term. I've even seen the 7. But basically, you'll get approved, you'll set a repayment term, they'll have a set interest rate, and then you have a set repayment schedule, what that looks like. So be advised, some lenders will collect on a monthly, some do collect twice a month, okay? And then some are going to collect weekly, all right? So if you are not prepared to do, and others even collect daily, okay? So make sure that you're reading the documents that come across, make sure that you really understand the terms, because you don't want to get caught up in any type of predatory lending situation where you've got 50, 60% interest rate. Now, does that work for some people? If they have a short-term need and they can flip that really quick, sure. But if that's not you and you don't think you can handle that, then absolutely you don't want to be taking that on, right? The goal here is to grow, okay, guys? So remember, with every single situation, it depends on your individual need and your unique situation, your industry, what is going on. All right, guys, let's step into collateral, okay? Because with collateral, what we're talking about here, we're talking about real estate, we're talking about receivables. And a lot of people actually don't know that you can use receivables as collateral, okay? Even for your 401k, you can use your stocks, okay? So those types of things you can use as collateral. And you can get financing with it, and you can get financing without it, okay? And there's many, 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 many different types of, options that are available to you. But I think the good thing here to remember is it's not the end of the world if you don't have collateral, if you don't have a hard asset, right? So, there are other options for you where they could look at your cash flow. Okay. Looking at your cash flow, determining what you're going to use the money for. And then you could get those 5 to possibly 7 year terms without having that hard asset collateral, which is a huge game changer, guys. Okay. Times are changing. There's way more options out here. There's where the strategies are coming out. So back in the old school way, the banks would only lend to you if you had some type of collateral, right? So there's another way, okay? And many other non-bank lenders where you actually don't need collateral right now. So here's a few tips for you guys, okay? And these, I think, are really going to help you move forward and understand, all right? Remember, we talked about looking at the documents, right? Look at the stuff before you sign. Look at this stuff before you sign, okay? Please. Ask these questions, okay? What's the term? Don't be afraid to ask these questions, okay? What is the term? How long do I have to repay this? What's the payment schedule going to look like? Is it going to be weekly? Is it going to be twice a month? Is it going to be monthly? Like, what is going on here, right? Make sure you understand if there's any penalties. Can you pay it off early? Or what's going to happen if you do pay it off early, right? So then on top of that, you want to understand fees, okay? Are there origination fees? Some banks have origination fees, okay? And then also, other companies charge success fees, right? We have a success fee where we get paid from the lender, okay? So guys, you want to understand the fees. Also be advised if there's a situation where it requires more complex, unique structuring, then there are fees to pay for your applications. Okay. So that doesn't go to the broker, it doesn't go to the platform, it doesn't go to your advisor, it goes to your application, it goes towards your due diligence. And so that might be your situation as well. So make sure that you're being very you're having these conversations. Don't be afraid, y'all, to have these conversations. You know what I'm saying? So get in there. Okay. Now we talk about being twice as prepared. Documents. Okay. And it's okay, guys, if you don't know what some of these are. Don't trip, chocolate chip. I got you. Okay. So if you don't know what some of these are, trust me, everybody's been there. Okay. But I'm here to tell you now, at least get this, start learning about it right now. Okay. And start compiling it right now. Okay. Because every lender is different, right? But they all want to see your financials. Okay. So you're not, and if you go somewhere where they don't want to see your financials, then you really should be a little concerned. Okay. You're probably falling into some type of high outrageous interest rate thing. Okay. So if you're requesting funding that's under, 150,000, then typically you just need to submit bank statements, right? Now, I want to delve a little bit deeper into that. For revenue-based financing, if you're typically going to seek something under 150,000, yes, you can only submit bank statements. However, if we're going to be looking at other options, right, with our private capital sources, with that creative financing, then you still want to be able to submit your P&Ls. Be prepared because they might ask you for those. P&L, profit and loss, your balance sheet. If you have any other loans out, then you'd be submitting something like a debt schedule. And then also, you want to submit your current financials, up-to-date financials. So have that prepared and, get with your bookkeeper, get with your accountant. But guys, also think about, I've talked with a lot of clients who are like, yeah, I got to get the information from my accountant. And then the accountant is out of town and they can't get a hold of them for like a week or so. So even though your accountant or your bookkeeper or whatever has the information, make sure that you are checking in monthly and that you have copies of everything as well. Okay, so it just helps to stay on top of things, okay? Because I see that actually happen quite a bit with certain people, and it delays the whole process. Okay, so guys, what's really important here, if you want to put yourself in the best position, because there's so many options out there, is you want to be aware of these strategies before you're just applying randomly online. Okay, if you are doing this on your own, as opposed to working with someone who specializes in working with multiple lenders like we do at Domino Effects, then it could take you a really, really long time. Have you guys wasted a lot of time? Have you ever felt like you just wasted a lot of time trying to get the financing you need only for them to tell you no, right? That's frustrating when they could have just said it in the first place, but it's frustrating, right? So, and then it just adds more stress, y'all. And then you can't be present when you're at home and you're with your family. So that's why it's important to be reaching out and getting these additional help, getting that additional assistance. So it's important that you're working with somebody that can provide you with multiple options. That's an expert in the field that specializes in this and has built the relationships with the lenders, has a team devoted to working with the lenders on a weekly basis, getting those updates because things change constantly. You guys, things are always changing. They're always changing their programs. They're always changing what's available. So, there's all of these different products. You want to make sure you're not getting matched with the wrong person. That's another thing too. If you're not, the wrong product, that's another thing, right? If you need an equipment loan, right, but you're getting matched to something different, or you're applying, at a company that doesn't specialize in equipment financing, then that just delays the process. Okay. So getting yourself with the right lender is probably honestly one of the most important things, right? Aside from having everything prepared and your documents prepared, getting with the right lender is going to be crucial, right? Just like if you're seeking investment, right? Getting with the right investor is going to be crucial to make sure that you are aligned, right? And it's one of the main reasons why I created this company, to help entrepreneurs, to help diverse founders, just like you, access more capital, okay? The right capital with the right strategy so you can get it done. All right. So we have multiple lenders on our platform. So give us a call, speak with our team, get matched, get your free finance assessment, your free funding assessment, and take advantage, invest in yourself, utilize this time and get your current blueprint of where you're standing. And then what is the next step for you to be able to access that capital that you need, because there's a bunch of different factors that are going to make up your approval, your rate, your term. Okay. It depends on your industry, your time in business, your credit profile. Okay. The amount of sales that you're doing, what you're looking to do. Okay. So those are things that you want to absolutely be thinking about. All right, y'all. So before I take off here, I have a special announcement again for Show Her the Money, which is happening next week, y'all. Okay. And we have come together because we believe in you. We believe in entrepreneurship and we want to help you. Okay. So Show Her the Money is on its 50 city tour. I think they've gone above and beyond 50 cities by now. Catherine Gray has produced this amazing film that really helps women and entrepreneurs, talks about female funders, talks about how to get funded, how to invest in other women funders, how to raise capital, how men can come out and support their wives, their sisters, their daughters, and how we can all generate some generational wealth, right? Create ownership, bridge this gap in funding, and really connect with resources. I don't know about you guys, but when I first started my business, the hardest part was not getting the funding, right? Yeah, that sucked, right? Not being able to get what I need right away. But truly what it was not knowing how to connect with the right resources in the next step. Knowing that you have this passion for this business, you believe you have this product or this service, or, you're a visionary, you want to build this company, but you don't know what to do, right? You don't know what the next steps are. And that was the most frustrating aspect, on top of not being able to access the capital. When I realized and came into the alternative finance space and realized all of these different amazing, there's literally a massive pool of private capital out there, guys. So don't believe the hype. Now, is it true that systemically there have been barriers in place? 100%, right? But listen, we're in 2024 now. We're progressing to 2025. Are we going to experience challenges? Yes. So that's why it's important to come to events like this, stay connected, and get those resources. I mean, we have Fourth Wave, which is supports women in tech out here in Sacramento, Clutch, Minervaverse. Okay, these are organizations that are dedicated to helping the advancement of women-owned companies. Okay, these companies that are generating very high returns, right? So why don't you want a piece of that? Okay, it's cool to talk about money, y'all. So let's get in the room, talk about money. We have limited seats available, and I want to see everybody there. All right, so it's September 14th. You need to click the link. I have the link in the bio, but go to the website, purchase your tickets, purchase 2 tickets, invite your friends, invite your family, invite your children. We have the Girl Scouts coming. Nabo is going to be there, and my daughters are going to be there as well. Okay, so get out here, represent, show your company, and let's live, let's build, and let's do this together. Guys, if you found this information helpful, then do me a favor and show me some love. Hit that like button, hit that support button, and hit that subscribe button to show your support, and share. All right, share with other people who are in business who could use this information if they find it helpful. We appreciate your support, and it helps the channel grow so you can continue to go live. Okay, so last thing, guys, just to recap. Okay, please take a step back again before you're randomly applying online. Check out making sure everything matches as far as like your business address, your business entity. Make sure you have your foundation set up before you're out there applying. Make sure you check your credit. You're pulling your personal credit. You're pulling your business credit. There's many predatory lenders out there. Don't think just because you were denied in the past that that's the end all be all and you can never get to where you want to be. It is just not true. And I'm a living testament of that. And we can all grow together. Okay. So take these strategies, take these tips. I hope you have a better understanding of how business loans work. And I hope to see you in person at this